The market just sent a warning signal so loud it is shaking both the factories and the vaults. Copper has just joined gold in a massive commodities sell-off. Normally, these two move in opposite directions. Copper is the industrial heart that goes up when the economy is booming. Gold is the safe haven that goes up when the world is in chaos. But right now, they are both crashing together. Let me break down why this is happening and why it should worry you. As of March 2026, we are witnessing a brutal, energy-driven liquidity trap. The primary trigger is the massive oil shock coming out of the Middle East. With crude oil surging past $115 a barrel and eyes on a record 147, the tax on global growth has become unbearable. Investors are selling copper because they see a massive industrial slowdown coming. If it costs too much to fuel the trucks and power the plants, the demand for copper literally evaporates. But why is gold falling too? Usually, gold thrives on fear. But in this 2026 scenario, the fear of stagflation is so high that investors are desperately hunting for cash. When oil prices spike, it creates an inflationary fire that the Federal Reserve has to fight. Even though unemployment has ticked up to 4.4%, the Fed has signaled to keep interest rates near 3.5% to stop prices from spiraling. This is the stagflation nightmare. High interest rates make gold expensive to hold because it pays no yield. Meanwhile, slowing growth makes copper worthless for the short term because nobody is building. So investors are liquidating everything, even their insurance like gold, just to stay liquid. Here's the kicker. Some analysts claim the risk of a full recession is low because of the current AI infrastructure boom. They argue that one-time fiscal stimulus will bridge the gap, but the market is not buying that story. The trade we are seeing today tells us that the oil tax is officially draining the world's wallet. We are entering a rare period where your safe assets might not be safe, and your growth assets have no room to grow. The global economy is currently caught between an inflation fire and a growth iceberg. And as the liquidity dries up, the question of where to hide becomes much harder to answer. If the world's most trusted metals are no longer protecting your purchasing power, what is the one asset in your portfolio that is actually immune to an oil-driven collapse? Follow or subscribe and stay ahead of the shift.